Hey traders, Nick Shaheen here looking at Hyliion again. I'm hesitant to do this video. Last time I got a lot of grief. I had good viewership, but I had a lot of grief from people who are super fans. So let me start with the positives. I don't hate the company. I love their trucks. I love the one they're working on. I love the concept of hybrid and retrofit. And I love they are giving truck drivers the opportunity to upgrade for relatively cheap, even if they have a truck already. So nothing against the company itself. I'm discussing the chart, okay, and the overall economy and the overall the macro, basically, because the charts don't trade in a vacuum. The companies don't trade in a vacuum. Regardless of how much I think the opportunity is great in one company, it has to trade within the confines of the whole market. Let me ask you this. If the market falls 50% tomorrow, do you think this one's going to hang on up here? It's not. That's the exaggeration to illustrate the point that it doesn't trade in a vacuum. All right, so if I look at the daily, and I'll tell you. So every time I talked about it, somebody would say, but the, what do we call it? The warrants, this and the warrants that. I think the warrants are come and gone. Their strike price was like 11 and change, I think. So that's gone. My concern is this huge head and shoulders, which insinuates that it's basically going to zero, if not negative. But obviously stocks don't go negative except if your oil last year. Oh, how ridiculous was that? But anyway, it doesn't tell a good story. It tells that there's a debacle coming. And they lost the neckline. They tried to hang on to it and they lost it. So is it going to zero? I can't tell you this, but it is a possibility. GM went to zero. A whole bunch of better companies went to zero. It is possible. Stocks do go to zero. If you don't know that, then you haven't been trading long enough. All right, let's put that out of the way. So how can we get back into the right side of the equation? So they lost the neckline, and I'm going to call it around 18. And now they have to get back above 18. It's as simple as that. A little more complicated. There are some other lines to watch. So this is 2-hour chart. You can see visually it's trending down, trying to base. Look, it's trending down and it's trying to base for the last 3 or 4 days, or whatever, how many days this is. So there is good news already, right? Right. So now we have a situation where they're trying. I'm going to start the market up. All right, so I haven't looked at this chart in a while. So clearly I see this fail, I see this fail. So the first level is right there, whatever that number is, 18.3. I'm going to eyeball it somewhere right here. That is the machines are looking for this level. You're saying it's not that accurate. I call bull on that, because what you think you're affecting the stock price of this, you're not. We are like we people are a tiny fraction of what's going on in the stock market these days. It's all machines. They call it algo. It's just a bunk word to say that it's programs executing code, and the code is pretty slick, and that's it. It's not AI yet. AI is when you tell a machine, hey, trade this ticker within these confines, and don't spend more than that, and don't do this and don't do that, and it tries to get better at it. But until it says, you know what, stop, I need to go and read and learn Chinese in order to read the Chinese headlines better, in order to be better at this, then that's kind of AI, where it steps out of this program and say, all these parameters you've given me, I'm missing something. I don't know what it is. I think it's learning Chinese. I'm making this up, obviously, but that would be AI. So we have a higher low trend. That's positive. We have almost a base. You know, they fell a little bit lower. That's positive. So job one, do not get lower than what you just did. That's job one. You have another line right here of support. So 16 and change, I'm going to call it 16.5, is support. So we have something going for the bulls, and we have the opportunity right there. And check it out. So now the trade is getting. I'm going to change colors. So the ranges went from here, and it's tightening, and it's going to come to a point. So the upside potential is going to falter right here because of this debacle, and this debacle, and this debacle, and this bounce. This bounce made it significant. Them losing the significant line makes it a problem going forward. You've heard it. Prior support becomes forward resistance. So that is the test. First test right here, second test right away. Boom. And then if you can get above it and test both for footing, then you can start fixing the problem. There's going to be a lot of resistance right here. This gap might not be easy to fill without a reason, like some sort of a headline. Now, the bad news is if you do this, then you want to bounce here and try to attack it again and repeat the same thing we said. You don't want to lose this. And if you lose this, let's say you bounce here and then you end up losing it, you don't want to lose this. Because if this is lost, I said 12 before, I think, in my other video, could come. The warrant strike was something 11.3 or something like 11.7. I don't know what it was. It's down here. So this is what I see in the chart. Don't get upset if this upset you. I didn't call for it. I addressed the upside potential, right? That's what I said. I said, let's look at the upside potential. And the lines to watch I drew, those are fact. If you want to ignore the lines to watch, then you're ignoring what goes on in the stock market. So this was a trigger, and look what it brought. Then it became a problem. And again, and again. But they're hitting the problem with higher lows, so maybe the momentum is with the bulls. Now, if we wake up and we're right here, and then the market goes whoosh, the market goes whoosh, this one is not going to make it either. So be open to that. I've said something last time that I still will say again. I'm not giving anybody advice on how to trade anything. But when I take a speculative trade, this is a speculative trade. Whether you believe in it a lot or not, it's speculative by definition because they are not there yet. We are buying hope of the future trucks to come, right? Hopium, which is fine. But it's a speculation that it will happen. And if it doesn't happen, then it's going to go to zero. And the fact is, when a speculative bet is in my portfolio, I don't average down. That's the point of the statement. Not to say it's going to zero. I don't average down because I don't know where the bottom is. I know where the bottom is with a company that has, say, $1 billion in cash. It's $1 billion plus its assets. I know where that bottom is. If the company goes out of business, they liquidate it, I get something back. So that's the pros and cons. Okay, I can average down in Apple. I can average down in Google and Facebook and even smaller companies. But I can't average down in something that may or may... I can average down in Moderna because they do have products now. I don't average down in Novavax because they don't have products yet. So that's the concept. So it is my opinion that I don't average down. So there is an inverse head and shoulder looking thing, which is also positive. It's kind of wonky with the neckline. I'd have to get up to here to draw a nice neckline, and that puts a trigger on a trend line basis around 18 and change. So we have a confluence of things that point the finger to 18 being the first battle, which was the line I drew. So it's not news to you if you've watched my videos before. Look, if you draw this line right here, somewhere around 18 is going to be the problem. Look at this. The mark to beat, the green line, all right, which is what got me in hot water with the fans last time. I said if it loses that, that's the problem. Look, this was the base for this rally. They tested it for footing this rally. Huge success in testing it this rally. They tried to hold it. They failed. Now they're trying to get it back. So that's job one. Get it back. It being this line. So 1783 is on my... No. 1798. 18. You don't need any rounder numbers than this. Plus or minus a few pennies. I just went through the minutia of it and then zoomed back out to why it was important. So head and shoulders, it's got a name for a reason. It's not BS. It does work. 100%? No. And nothing is ever 100%. 100% breakdown, yes, and then it's 100% the job of the bulls to retake the neckline to nullify it. Otherwise, its target is coming, and it has supports on the. Okay, so watch this, and look left, right here, and look left. This was the base right there. These are not coincidences. So when the stock price gets to a point, the machine will look back. What happened the last time we were here? And we'll decide, adding the extension it's been tracking, adding who's selling what. It's been tracking, and then decides whether it needs to push the sell button or the buy button. So on a 5-minute basis, you can see who's in charge or not. And right now they are fighting for control. That's my interpretation. They're teetering around levels, fighting for control. If I zoom out to 15, same. I'm trying to find a trend. I don't have a recent trend. We went up in a bullish trend, and then now they're fighting for control. So if you believe in ABC moves or 3 pushes or whatever, here's one push. They're consolidating to build a base to push again. That works for the bulls. This was 15 minutes, 30 minutes. I don't have a trend yet. So there is no trend. They're fighting for control, period.